What if your bank account received money every single month, not from your job, not from a side hustle, but from investments you set up once and never had to touch again? That is not a fantasy. That is exactly how the wealthy operate. And in this video I am going to show you 5 specific investments that are paying real people real money every single month right now in 2026. Quick question before we go any further. Have you ever received a single dollar of passive income in your life? Drop a yes or no in the comments right now. Stay with me because investment number 3 on this list is the one most people have never heard of, and it is arguably the most powerful monthly income investment available to ordinary Americans today. Welcome back to Rich Habits. Subscribe if you are new here because this is the kind of content we release every single week. Let us get straight into it. The first investment is Dividend Stocks, and I want to explain this differently from how most videos do because most people hear Dividend Stocks and immediately think it is only for rich people with hundreds of thousands of dollars to invest. It is not. Here is the reality. Companies like Realty Income Corporation, Coca-Cola, Johnson & Johnson, and Altria have been paying dividends to their shareholders consistently for decades. Some of them have increased their dividend payment every single year for over 25 consecutive years. Those companies are called dividend aristocrats, and there are 68 of them in the S&P 500 right now. When you own shares in one of these companies, the company sends you a portion of its profits on a regular schedule. Most companies pay quarterly, but a growing number pay monthly. Realty Income Corporation, for example, has paid a monthly dividend every single month since 1994 and has increased that dividend over 125 times since then. Here is what the numbers look like in practice. If you invest $10,000 in a dividend stock paying a 4% annual yield, you receive $400 per year in dividends. That is roughly $33 every month, deposited directly into your account, for doing absolutely nothing. Reinvest those dividends automatically and the amount grows every single year without you contributing another dollar. You do not need $10,000 to start. Platforms like Fidelity and Robinhood let you buy fractional shares of dividend-paying stocks for as little as $1. The starting point is not the amount. The starting point is the decision. Now here is one that surprises almost everyone who hears it for the first time, and that is real estate investment trusts, which most people know as REITs. A REIT is a company that owns income-producing real estate. Shopping malls, apartment buildings, office complexes, warehouses, hospitals, data centers. The REIT collects rent from all of those properties and is legally required by the United States government to distribute at least 90% of its taxable income to shareholders as dividends. 90%. Every year. By law. This means that when you invest in a REIT, you are essentially becoming a landlord in massive commercial properties without ever buying a building, managing a tenant, fixing a toilet, or signing a mortgage. You simply buy shares and collect the distributions. Some of the top REITs paying monthly distributions in 2026 include Realty Income Corporation with a current dividend yield of around 5.6%, STAG Industrial which focuses on warehouses and logistics properties and pays monthly, and LTC Properties which focuses on senior housing and healthcare facilities. The average REIT has historically returned between 8 and 12% annually when you combine share price appreciation with dividend income. That is a genuinely competitive return with far less volatility than many individual stocks and with the added benefit of real asset ownership backing every share you hold. This is the one I promised you earlier, and I want you to pay close attention because most financial videos never even mention this and it is one of the most powerful monthly income tools available in 2026. It is called a high-yield bond fund, and specifically I want to talk about covered call ETFs because in the current market environment these are generating monthly income yields that traditional dividend investors can barely imagine. Covered call ETFs are funds that hold a portfolio of stocks and simultaneously sell call options on those stocks, generating premium income that gets distributed to shareholders. The result is a monthly income yield that in many cases ranges from 8 to 12% annually, paid out in monthly distributions. Some of the most widely held covered call ETFs right now include JEPI, which is the JP Morgan Equity Premium Income ETF, currently yielding around 7 to 8% annually paid monthly. JEPQ, which is the Nasdaq-focused version offering similar yields. And QYLD, the Global X Nasdaq 100 Covered Call ETF, which has historically yielded between 10 and 12% annually. These are not obscure instruments available only to institutional investors. They are publicly traded ETFs that you can buy through any standard brokerage account on any platform, just like buying a stock. Here is a practical example of what this looks like. An investment of $20,000 in JEPI at an 8% annual yield generates approximately $133 every single month in distributions, deposited directly into your account. On $50,000, that becomes $333 per month. On $100,000, over $800 every month. From a single investment you made once. This is why I put this at number 3. For people looking to generate meaningful monthly income in 2026 without the complexity of managing individual bonds or real estate, covered call ETFs represent one of the most accessible and powerful tools available right now. The fourth investment is something that most people overlook completely because it does not feel exciting enough. And that is exactly why it works so well for building reliable monthly income. Money market funds and high-yield savings products are currently paying rates that would have seemed extraordinary just 5 years ago. As of mid-2026, the best money market funds are yielding between 4 and 5% annually. Certificates of deposit from competitive online banks are offering similar rates, with some short-term CDs offering above 5% for 12-month terms. Why does this matter for monthly income? Because the interest on money market funds and many high-yield savings accounts accrues and is paid out monthly. On a $50,000 balance in a money market fund yielding 4.5%, you receive approximately $187 every single month in interest, completely risk-free, with full access to your money at any time. For people building an emergency fund, holding cash between investment decisions, or simply looking for a zero-risk monthly income stream to complement their other investments, this is not just acceptable. In the current rate environment, it is genuinely attractive. Top options right now include the Vanguard Federal Money Market Fund, Fidelity Government Money Market Fund, and high-yield savings accounts from institutions like Marcus by Goldman Sachs, Ally Bank, and Sophie, all of which pay monthly and charge zero fees to access. The fifth investment brings everything together, and it is the one that has the highest long-term potential of anything on this list. It is a dividend-focused index fund, specifically funds designed to maximize monthly or quarterly income while maintaining the diversification benefits of owning the broader market. Two standout options in 2026 are the Vanguard High Dividend Yield ETF, ticker VYM, which holds over 400 dividend-paying U.S. companies and currently yields around 2.8 to 3% annually, and the Schwab U.S. Dividend Equity ETF, ticker SCHD, which is widely considered the gold standard of dividend ETFs, consistently delivering a yield of around 3 to 3.5% while also appreciating significantly in share price over time. What makes dividend-focused index funds particularly powerful for monthly income is that they give you the diversification of hundreds of companies while specifically screening for those with the strongest and most consistent dividend histories. You are not picking one company and hoping it keeps paying. You are owning a basket of the most financially healthy dividend-paying companies in America, all at once, through a single purchase. SCHD in particular has delivered a total return of approximately 12 to 14% annually over the last decade when you combine dividend income with share price growth. That means your income grows over time. The dividends you receive in year 10 are significantly larger than the dividends you received in year 1, from the same initial investment. Let me bring all 5 of these together clearly so you leave this video with a complete picture. Dividend stocks give you direct ownership in companies that share their profits with you on a regular schedule. REITs give you the income of a commercial landlord without any of the operational burden. Covered call ETFs like JEPI and JEPQ generate exceptional monthly yields by leveraging options strategies on top of existing stock portfolios. Money market funds and high-yield savings deliver reliable risk-free monthly interest at historically attractive rates. And dividend-focused index funds like SCHD combine monthly income with long-term share price growth into a single low-cost investment. You do not need to pick just one. Many serious income investors use a combination of 2 or 3 of these simultaneously, creating multiple streams of monthly cash flow from a single diversified investment strategy. The people who are financially free are not people who found one magic investment. They are people who built systems that sent money toward them from multiple directions at once, consistently, month after month, whether they were working or not. Now before you go, I want you to answer one question in the comments. Which of these 5 investments are you most likely to try first and why? I read every single comment personally and I will reply to as many as I can. If this video gave you something genuinely useful today, please give it a thumbs up and share it with one person whose financial life it could change. Subscribe to Rich Habits so you never miss a video like this one. I will see you in the next one.